So let's take a look at comparison. So that's for stock, individual stock average. You can see the difference is not, there's no much difference between China and US. So for individual stock volatility, they are similar. They are similar. So the main difference is that when you aggregate them, when you have a portfolio, when you have diversification, well, US market perform much better for that in that sense. So then we come back to that news. So the professor, the fund of the professor, so earn about 0.5% return from that half a year. So is that a good performance? Is that a good performance? So keep in mind that they try to get the relative performance of the stocks they selected to the whole market. They hedge for the market. So think about if you buy the whole market and short the whole market, you always get zero. You always get zero. So basically, in this sense, we should look at the absolute performance, not compare that to market performance. So the absolute performance is less than 1%. So that doesn't mean anything. So nothing left after hedging for the market risk. That's also consistent with that. The whole market is kind of central force driven. So it's very difficult to get some relative performance to the market. Whatever stock you are picking. I'm not saying you cannot do that, but it's relatively difficult. So what could be a strong common factor? That could be policy, that could be macroeconomy, that be something maybe I don't know, but you can come up some idea in your mind. But basically, what I want to make a point here is that for the whole market, China market is built a very low diversification characteristic. It seems they're really kind of policy-driven or government-driven. So you do not enjoy any benefit for holding more stocks. So you are mainly subject to, not say, individual operations. You are subject to some kind of political risk for the whole market. Indeed, I maybe should compare this one to India market, to Hong Kong market. Unfortunately, I don't really have those data on hand. So maybe you can compare that to see if that's a difference. So something related to this one I want to talk about is something about earnings restatement. So what is earnings restatement? So you have previous accounting errors. Now you need to correct them backward up to maybe 5 years or even longer period, or 2 years. That's possible. Sometimes we call it rewriting earnings history. So you need to rewrite all your history about your financial reports because you have made mistakes. So why? Why some firms need to rewrite their earnings history? So there could be intentional manipulations that could be related to scandals like error like WorldCom. So several years earlier, they manipulated their earnings. They try to manipulate the expectation of market to boom their price. Well, eventually it turns out they were telling lies. So they were asked to revise all the reports with mistakes. Okay? That's kind of intentional manipulations. So that's mainly related to scandals. And that's very bad signal of the firm. We also have some unintentional mistakes, but that's very unlikely, and that's usually minor. And these so-called unintentional mistakes, they could be in any direction. For manipulation, usually they manipulate the earnings upward. They try to move their price. They try to build a better image of the firm. But for unintentional mistakes, they could be up or down. I mean, that's random. That's random. So, well, given that the characteristic of these kind of events, they could be very bad signal of the firm's quality. They could revise all the expectations of the investors. They also could cast doubt of the integrity of the management, of the integrity of the board members, and also the cast doubt of the future operations. So the reason you were telling lies, of course, because you did not do a good job, and you cannot maybe do a good job. So that's in EUS. So when we have such an event, on the event day, the average drop of the market price is about 9%. 9%. So on a single day or 2 days around the event window. So in total, it's about